All right, how's everybody doing? This is True Crypto 28 from Twitter. Mr. Anderson, just checking in on everybody. It's been a while. Definitely time to make a video for everyone. Got very busy. I was in the lab. I was working on a lot of different things. Sometimes when you go into the lab on these indicators, man, it is a deep process. I mean, it's deeper than you could imagine. Just you come up with a concept or an idea, and then to implement that, it's a lot of fine tuning, and then even when you get there, a lot of testing. And then you realize maybe there's one thing you need to tweak, and by doing that, you might have to tweak 20 other things. So it's quite the process. But here I am. So I figured I'd give an update on Bitcoin, everyone's favorite, where we're at, where we're headed, etc. So let's go ahead and start to get into that. As usual, I know these videos can go kind of long, especially an update like this. So I'll try my best to keep it short, which means I won't explain a lot of things in too much detail except for the main point. First of all, let's get this off of here. Oops, wrong one. Right there. Okay, so I want to bring up a weekly chart. I think it was my first video I went into. I'm not going to repeat the whole thing, but basically I explained that there was a level here, which I believe was right there. We'll relive it a little bit. I'm not going to go over the whole thing. You could watch that original video, but I drew a horizontal, which I said, in my opinion, mattered. And I believe that was right about there. I think it was there. And that horizontal also had a level that I extended beyond that, where I called it a catch zone. Let's just look. I basically brought it up on a monthly at that time. Let's go ahead and do it accurately. Yeah, so because of the fact that the weekly close extended to the end of the month completely, I utilize that as my catch zone. The reality is, whether or not this is completely accurate or if my horizontal is dead on, it's not the end of the world. You have to pick your level. Hopefully there's a good reason for it, and roll with it and go from there. But basically the video was showing that this was a line that I was stating we could not cross. This is my do not cross line and my catch zone. And oops, I don't know what I did there. I apologize. Let's get rid of that. Anyway, so in doing so, I see what I did. I clicked on the wrong thing. Let's get my box. Bear with me one moment. We'll get this resolved. Okay. Just want to have that green for you so it's not confusing. This was my catch zone on a weekly basis. And it made sense to me because, go ahead and start this where it was. Right from the get-go, the next week you had some rejections, meaning that it was support. Bring that up slightly. Right there. I apologize, there's some allergies this time of year. And we seen that it rejected this area and then went parabolic. Then eventually came back for the test in February, bounced off that same area, my catch zone. Didn't quite get to my horizontal line, but enough to bounce and almost had a 100% move here, which is very impressive. Barely made it to the catch zone, bounced again. Made it deep all the way down here in June to my actual, not quite to it, but just about to my line. I'm just trying to make this a little bit too perfect for you, so there we go. Just about made it, but made it deep into the catch zone. Held. You had the tweezer bottom on a weekly, which is a beautiful thing. Nice run up. And here we are. We're basically hanging out in this catch zone, probably testing it far too often. And this is a line that I said we cannot cross. And I drew some comparisons to the 2013, 14, 15 bear market for Bitcoin. And I explained that we had something very similar at that time. So that's a quick review. I'm not going to go too deep into it because what I'm going to talk about now is a Fibonacci weekly 89 EMA, exponential moving average. If you don't know too much about that, you might want to take a moment, Google exponential moving average. I'm not going to go too deep into it, but what I will explain a little bit about is Fibonacci, and when I say a little, I mean I'm going to very, very little. Most people probably are familiar with it, but what are Fibonacci numbers? Pretty simple. The number 1 plus 1 equals 2. Very simple. So here's your Fibonacci numbers. 1, 1, 2 in a sequence. Now 1 plus 1, your next Fibonacci is 3. Now 2 plus 3, your next Fibonacci is 5. 3 plus 5, next Fibonacci is 8. 5 plus 8, next Fibonacci is 13. So this is a Fibonacci sequence. And if you continue to add the previous two numbers, you get 13, 21, 34, 55, 89, 144, 233, 377, etc. And those are Fibonacci numbers. And whether you want to understand it, believe it, trust it, the reality is the maker of this world utilizes Fibonacci numbers. And you can read about that all you like and figure that out. But it's very meaningful. And I'll show you what I mean. Now, are they the only meaningful numbers in moving averages and exponential moving averages? Absolutely not. In fact, right now we're dealing with a 22 EMA, which I won't get into right now. That is a real headache. And it's not a Fibonacci number, so it doesn't always have to be Fibonacci. But I'm going to show you today why it matters. And even if you understand Fibonacci, you use it, possibly you haven't been looking at it from this perspective on a weekly basis. So you might be able to take something from it. Oh, don't want to sell anything there. Okay, forgive me for my coughs today. As I mentioned, I'm battling some allergies. So that was a quick overview. Now, this line right here is the 89-week Fibonacci. I only have that one in here because, simply put, that's the one we're dealing with. We dealt with it right there during the tweezer bottom. Almost dealt with it there. Dealt with it here, and here, and here, and now 3 consecutive weeks. What is the danger in this? Well, let's go back in time and talk about the danger of dealing with this. By the way, this is a price action channel, which maybe I'll talk about later. It's a very simple tool that non-professionals should absolutely use. And I'm sure they have plenty of price action channels available in TradingView. I created one as well. You guys can have access to mine, but we'll get into that later. Basically, we turn that off just so that's not annoying anyone. All right, so here we are, 89-week EMA, Fibonacci number. Why does it matter? Well, let's go back in time, and we're going to go to the previous bear market. Now, we're going to see it's actually a different scenario. Let me show you again, close up. Right now, we're dealing with the 89, which is an upsloping 89 EMA. However, back then, the way it occurred is we didn't get a bunch of retests. So these fractals, when you look at the fractal of the bear market, there's a lot of similarities, but they're also going to be different at times. And what we see is that you ended up dealing with it a little bit for a couple weeks. Really, a couple weeks is understating it. Let's just see what exactly happened. You dealt with it right here, tried to reject. The following week, you'd actually see that it tried to push through it and then finally caved in. The next week, you had a terrible down week, and at some point in that week, I don't have the structure of that week, but it tested and failed. You had an inside week here. Next week, it tried to fight that 89 yet again, reject it. Came down, and eventually tried to push on through, and it was too much. You got a terrible rejection the following week. So although it was different, it mattered. It mattered significantly. And in fact, it always matters. Here's what is interesting about Fibonacci. Here's why you guys need to know them. Okay, I'm going to throw up a whole series. I just threw up a bunch of Fibonacci's earlier. Let's start with an 8. This is the 8, that little line right there. I'm not going to pay too much attention to the 8, but next one is a 13. 13 is a purple line. Don't get too caught up in this right now. Just kind of pay a little bit of attention. We'll go over in a minute. Next one's a 21, should be blue. There it is. 34 is going to be a different kind of purple. Again, don't worry about the colors too much. 55 is going to be white, because I always make it white. And we already have the 89 up. Okay. Why am I bringing this up? Well, during the uptrend, what you'll notice is, not coincidentally, you end up having a situation where you're riding the 8 during that uptrend. When you pulled back to the next Fibonacci. In this case, it was the 13. It bounced. When that gave, it came back down to the next one, the 21. It bounced. Then when it started to try to build on that, the 13 again, back up to the 8, rode that. And then when that started to collapse, 8 to 13, hold it a little bit to the 21, hold a little bit to the 34. Let me zoom in on this in case you're seeing it. I mean, this is just how it works. This isn't a coincidence. This is reality. This is how this works. And it's basically how it always works. So it's something you should pay attention to, right? So here we go. We bounce. So when you're above the 8, things are good, right? You're clear, especially on a weekly basis. you had a little dip in terms of the EMA fan. We're not going to get too deep into what that means today, but ultimately it started to climb and it went parabolic. Beautiful move. So it goes parabolic, and eventually you get some bubbles. Bubbles are bad, right? Bubbles in your EMAs are bad as well. And you start to have the collapse, but what happens? Despite the fact that it went parabolic, and I'm sure this is riding some other, maybe a 5 or even a 3 at some point, but you're in a position to where it's falling back, and what's it do, of course? Test the 8. Test all the way down to the 21. 8 holds it again. Down to the 13. 21 holds it for a little bit, gives in. There's the 34. Tried to fight back. Now the 8 and 13 combos resistance. Fights it. 8, 13 combo resistance again overhead. No good. Going down. 34 is no longer going to hold. Guess what? 55. All right, well, 55 might be our saving grace. Bounce from there. Oh, we have too much overhead resistance. Now we're getting squeezed. Good news is it squeezed and bounced out back in above these. And what happens? You end up having the fight again. 55, 1, 2, 3, 4. These are weeks, 5 weeks before giving way. And then, of course, it tests our 89, which in this case couldn't hold. It was too much. And we seen that it didn't hold. It was different. But again, what was different is this time it broke quick, whereas right now we're dealing with it holding as support. But when it did break, it was serious resistance, right? 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks of resistance. You want to call that one, call it 10 if you want. So 8 to 10 weeks, however you look at it. But once it rejected it, what happens? Do you need me to tell you what happens? I mean, I can, but let's take a guess. Let's put up this magic 144, right? Fell, tested the 144. So 89, this very random Fibonacci number, right? Obviously it's not random at all. It's a Fibonacci number. Happens to catch it again. So why did I bring that up? Because you went from 89 to 144. And then when you lost 144, any guesses, guys? What's going to be here? Yep, 233. Exactly. And then the 233, the next line Fibonacci number is the one that catches it. And it holds, it rejects strong. But now, of course, look at this. You have your 144 acting as resistance. Again, it breaks through a little bit. Too much to deal with. You have a downsloping 89. You lose it again. Now what's happening is, I'll try to bring this up. You start to get these Fibonacci's coming together. And when that happens, you tend to get a volatile move. And in this case, it was able to push on through. And when it pushed on through, your bear market was over. So the point I'm making very clearly is that Fibonacci numbers matter. They matter a lot. They matter significantly. It's something you need to pay attention to. And on a weekly scale, it's very important. Now, I'm not going to go back to the present time. You know what I will do, though, is you might say, well, hey, look, there's more time. We had other bubbles, right? Basically, this was a massive bubble at the time, and what we ended up seeing is it was a micro bubble. This also was a massive bubble at the time, but obviously when we went to 20 grand, we could see that this was, again, a micro bubble, right? So what we find out is we don't have the data. If you see going back, there wasn't 89 weeks. So we can't really, I guess there was technically over there. You had a situation where you had an 89 week, but it doesn't go back. We basically are a few weeks shy. So what do? We're going to level down our time frame. Because weekly wasn't available at that time, we're going to look at daily. Of course, I lost my chart, but I will scroll back over there. Forgive me. So what I'm doing is I'm basically now moving it to a daily Fibonacci EMA scale. I'm going to look at the Fibonacci fan, and kind of see what we dealt with in one of the original bubbles. And I can promise you, whether you were around or not, this was a painful bubble at the time for those people. Why was it so painful? Well, let's see. Those people rode Bitcoin from nothing up into $32 right there, all the way back down to 2. Trust me, that's pain. But what do we see? What we see is that we had a similar situation all the way back then. Okay. By the way, I haven't done this. I just thought to do this right now on this daily, but I know how it's going to play out, so I can do it. What happened? Parabolic move. Come back. Test your low time frame. 8, I believe that was. Skip down through the next time to the 21. Rejects. Back up. Now you have overhead resistance of the 8. I'm going to run through this very quickly. Now the 34, actually the 55. Held. Back to the 8. Back to the 34. Maybe we're building on something. Uh-oh, wait, now we got the 8 and the 13. You're pinballing back and forth here. And then ultimately, you have this 34 doesn't hold anymore. Now to the 55, back up. Too much overhead resistance to deal with. Back down to 55. It tries to hold. It's getting squeezed. I mean, that is a squeeze right there, right? A massive squeeze. It just can't hold any longer. When you lose it, you had a day where the 89 tried to reject, couldn't do it. Next stop, 144. Tries for several days, couldn't hold. 233. Does a good job. The 233, it's pretty strong. Back up to the 89. Back to the 233. Excuse me. Back to the 144. Back to the 89. Back even to the 55 a little bit. But again, too much resistance. And now we're back again to this 233. I mean, this is just playing out perfectly. I'm telling you, I did not look at this. All right. So now the problem is we see that we lost. Now we're going to have to get into some crazy numbers. But what happens when we lose now this 233? I mean, I guess I can show you. But you can guess it. I'm sure you can guess what's going to happen, right? 377. Yep, right there. There's the 377. So here we are. This isn't magic, right? We're showing you this. I'm putting these numbers up. I'm saying, all right, well, now I'm going to throw up a 377. I mean, what kind of insane number is this? A 377 EMA. And it just happens to be the absolute catch right there. Now, the problem that we're going to run into here is that I don't believe there's going to be a 610. Let me see, though, because I don't think there was enough data. But I could tell you if there was a 610, it's going to be there, but there's not. Okay, so there wasn't enough data at the time. So ultimately, at that point, you're out of Fibonacci, and basically you bottomed at that $2 mark. But had there been, that would have been it. But this is, I mean, this is as close to magic as you get. I mean, this is to be able to say, for me to say, hey, look, I'm going to put an EMA up, 377, and it's going to end up catching this particular lower low. And it does perfectly. It catches it here and there and there. You end up getting about 4 tests before that gave way. And then, of course, it acts as the rejection multiple times before giving away again. And then, of course, on the way back, same type of scenario. So that's just showing you how it can work on a daily. Let me just change this back to, I think I had this as an 8, right? All right, now let's go back to the 8. And let's go back to the weekly, because now I want to fast forward. I think hopefully everyone's seen this. There's no way anyone looks at that and says, Fibonacci does not matter. It matters. EMA Fibonacci absolutely matters. It's very important. So what do we do with this information? Well, you know what? While I'm here, I do want to check something out. I apologize. Let me go to the daily. Now, one way. All right, forgive me, guys. Thanks for being patient. Anyway, I apologize for the delay. I'm just kind of trying to figure something out. All right, I'm not even going to get into these timelines. I mean, that's just forget about it. Okay. I can already see, looking at these small scales, that it mattered significantly. Obviously, I was just going to say, you know what? Obviously, there was many bubbles prior to that. You know, basically, it's about time frame, and the time frames, you know, shorten in those situations. But we could see they mattered. You know, you got the 21 catching, then the 34. You know, I was going to watch to see, you know, how that all played out. But we're getting too micro there, and I probably have to shift down because of how small of an area this is to like a 12-hour, and my guess is it will work pretty perfectly. But let's not go too deep into something like that. Let's just move forward. Oh, you know what you could do? You could put on something like the Golden Child. And get rid of that one for a second, just so that we can clear some data. I guess the other option, let's see. I'm really bringing this whole entire video to a halt. I apologize, but Now that I'm living back in time, I just want to see this for a second. Okay, so if you have the golden child algorithm, I guess none of this would have mattered because you could have bought here, literally sold on a strong, strong sell right at the very top. Had a little counter trend that you might have probably got chopped out. Not much happening there, but then basically caught yourself short again from here. A little bit of a buy on the counter trend. You got to be careful anytime, by the way, where you're in these indicators. If you're getting counter trends in a major downtrend, you don't have to take those. I mean, let me turn off some of these EMAs again. I'm kind of switching subjects. I apologize, but this is for my own. Obviously, you know, I have a real passion for these algorithms that I've been building. So when I get a chance like this, I do want to kind of check it out and see how it would have played out in the past. I never actually came back to this time frame, so but you guys can experience it with me. I know a lot of people are interested in it. So one thing you can do is you put on a price action channel. So what's a price action channel? Give me a good chance to explain that. Pretty simple. Two very simple smooth moving averages, and you can adjust those. And essentially you're setting one to a high, one to a low. And by doing so, you're going to create a channel. And the idea is pretty simple, is that look, when things are in the channel, if I'm an inexperienced trader, I probably don't want to trade it, or at least trade it on that time frame, which means you want to level down your time frame if that's the case, if you're seeing yourself inside here. But what it does tell you is that when you get outside of the channel, look, outside, you want to be short, right? And if you're to the upside of your channel, you want to be long. Look at this. You could erode that all the way in. Once you get back inside, it's choppy. So that just means either no trade or change time zones, time frames, so that you can look for a better trade. But then what happens once you get outside again? You basically live outside. You could have caught the entire parabolic move just on that alone. So significant benefits there for a price action channel. But where does this come into play? Well, basically on some of these counter trends, you're in such a strong downtrend. You gotta utilize a little bit of TA, right, to say, man, we are just in a downtrend. I'm getting a little bit of a counter trend signal here. And the signal works. You know, look, you got to buy here. It did move up, right? But obviously it's nothing significant. So you're also living inside of this price action channel. So unless you bring it to a low time frame and take the signal there, it wouldn't make a lot of sense. So just kind of keep that in mind, that you want to follow your trend a little bit to decide on your trades. And then, of course, if you get yourself a short when you're downtrending, well, no, those are the ones you want to jump on and basically roll with them. You get a buy signal. It's a good idea to flip. You can also use something like a Fibonacci if you want to have a security blanket to get out of your trade, something along those lines. And if you get a color change, then, you know, why hang out and take the risk of losing some profit? But anyway, I apologize. I just wanted to see that. Obviously, that kind of killed it in those situations. It literally caught, look at this, dead bottom, strong buy, ran up all the way. I mean, you're talking about going from 2 to 7, which is over 300%. So good news on that. All right, let me get off that for a second. I apologize. Back to the point. We're talking about weekly EMAs. So I want to go back to present time. You've seen everything. You've seen how it worked all the way back in time. You've seen how it worked in the previous bear market. So it matters a lot, and I'm going to take you back to present day. And we're going to talk again about where we're at and why it matters. So here we are. This is my zone. This is my horizontal. Maybe my horizontal ends up being wrong. Maybe the horizontal should be up here. You know, maybe we're traversing it right now. Meaning, you know, we've crossed a couple times and we're in a real indecision. Probably in a real indecision either way you look at it, but ultimately the idea is this. Looking at the 89 EMA, one thing I know is this. We cannot lose that line either on a closing basis. We just can't. I mean, first of all, we've already shown that it's been tested 1, 2, 3, 4 different weeks, 5 different weeks, 6 different weeks. This is the 7th week that it's being tested, in my opinion. Man, that is a lot of tests, right? So what's going to happen, though? What's going to happen? Well, if we lose this, let's go and bring up our 144. This is your destiny right there. You lose this line, that's your destiny. Does everyone get that? Let's just go ahead and draw it out. We could do quick math, but this will help people. Lose this line on a closing basis. You're looking at, for sure, as we already seen, at least a 20% drop to test that 144 Fibonacci on a weekly basis. Now, hopefully you spring from there and get back above that 89, right? You have to. Otherwise, in my opinion, we're looking at a secondary bear market. It's going to be a long process. But we also have to accept the reality that now some of these low numbers come into play, because let's assume that not only do you not spring back above the 89, but you end up in a situation where you start to test this 144. Well, look, we already know from history what that means. That means this one becomes your destiny. 233. Now it's rising, but you're talking about somewhere in that $3,600 range at the moment. And that becomes realistic. I mean, you're talking about something that now, we're not talking about pie in the sky where guys are just throwing off numbers, and everyone loves to say 3K, 1K, and all these numbers, even though they know literally just about nothing about technical analysis. This is real technical analysis. This is real deal stuff that we know this will occur. This is not going to close on a weekly basis under the 89-week moving average, float here, and bounce back. It's not going to happen. Now, if it happens intra-week, can this line, this last line of defense, this do not pass line, act as a spring and get you back over that 89? Sure, absolutely. And that has to be what the bulls are relying on. But the reality is this. We have to be in a position where we can expect the possibility of losing this 89, which means 100% we're going to test the very next Fibonacci EMA on a weekly scale, which would be here. So you're talking about touching, it's rising a little bit, so it depends, because, look, we can have a little bit of rally right here back to the top of the price action channel. Maybe even, by the way, let's just draw. I'm not huge on diagonals, right? But if we're going to go week to week type closes, let's draw that. That's probably a good diagonal. We can utilize this line as a descending if we want. The other thing about, what formation are we in? We're probably in the descending, and if we are, it's probably a 70% chance to decline. But that also means there's a 30% chance that it's a head fake and you take off the other way. But the other thing is this pattern can change, right? Do we even know what the pattern is? I mean, the reality is, we look at this close, we start looking at closing lows, we can also say we're right about here. And maybe our true pattern, I know I got a lot of a mess in here for you. Let me close this price action channel for you. Let me get rid of my zone, my catch zone also. Just trying to clear some of this up. Maybe this is the formation we're dealing with, which is this coil triangle. Forgive me, just coil's built in me to say it. Maybe this is the coil we're dealing with. Oh, it could be a lot of different ones. I mean, you can look at something else if you want. I mean, I guess technically you could actually go back to this one right there. It's okay to run through that because that was a down week. You're looking at closing levels. So possibly say that something along those lines, that would be okay as well if it was a little bit deeper. The problem is, how do you incorporate this? Kind of float it in no man's land. But regardless, diagonals, don't get too caught up in them. It's important. It's interesting. Watch it. Look for levels of support and how to play it. The support's held so many times that, if you've been playing the support, which you should have, great. Then you should continue to do so on low time frames and be very careful with that so you don't get burnt on anything. You want to get burnt, obviously, on a trade. But just wanted to let everyone know what we're looking at. Obviously, bulls are hoping that, you can skate through these next few weeks and sneak out of here if you could and start to build on something. Hopefully get some sort of higher high. You really would have to close above this 8,200 and change level on a closing basis. And by the way, in my opinion, really even above this 84. When you get a wick like that, you don't only want to get above the closing high, you want to get above the wick, because the problem is what can happen is you get a lot of this nonsense where you basically get head fakes, right? I mean, this was a real painful, ugly head fake if anyone remembers. But that's where we're at. This is getting long already, so forgive me for that. But I think it's informative. I think it's important. I want you guys to understand, even if you understand Fibonacci, start to take it a little bit more serious. You can use other lines, other numbers. You can use the 20, the 50, the 22, the 100, the 200. They all matter. It's not that, if you see a pattern that's holding, you see something that's rejecting or supporting or anything along those lines, then it does matter. Obviously, something's going on at that particular number. But I assure you, these weekly Fibonaccis always matter, and they will matter again. So that's it. You know where we're at. Play it on a low time frame. Take a low time frame approach. In fact, you know what? I'm going to make another video where I talk about a trade that I did yesterday. where we talk about picking something on a low time frame, just so you can kind of identify that. The idea here is safety. Oh, by the way, you don't have to play this, right? You might say, oh, wow, 20%. If I'm 50x or 20x or 100x and I catch a 20% move, that's going to be terrific. Great. And if you're wrong, you're going to get killed as well. So by all means, you don't have to play this at all. You just don't. And go ahead and at least get this price action channel, which is free. Just put True Crypto 28. And you guys can start to utilize that if you want, because, again, let me clear up some of this. Because ultimately, the price action channel is one that's going to assist you to where, look at this, if you're just using that alone, the price action channel, you're going to get short outside of the channel on the downside, and you had this run up. And then you could have got long, whether you call it here or here, and you would have had a nice pop. Same thing here. Anything above the channel, you're riding it until you're back in. And the simple process is this. When you're inside the channel, you don't really want to be hanging out or trading unless you go to a lower time frame, and on those lower time frames you might be outside of the channel. What do I mean by that? Well, all right, so right now we're inside the channel. We're dancing inside the channel a little bit. I may not use now as an example because now's a little bit testy, but we just popped out on the daily scale, so we'll have to see what happens, being that we're midweek. Oh, you know what, I'm on this index. Let me change this index here. Let's go to XBT. I was using that one because it has a pretty good historic view, but they don't do anything intraday. All right, so if I go to a 4 hour now, if I size myself down, you could see like, all right, well, when you came out this channel, if you were watching and you got in, you had yourself an opportunity for a move. Same thing over here. Same thing here on the rise up. And you can lower this. I've been playing things mostly on a 2 hour time frame, and I'll explain that again in another video. And then shrinking it down from there, probably all the way down to like M15, sometimes M5, which it's not something I do a lot. It's just that's basically what the market's showing me. So that's what you have to do. You have to adjust. The market's adjusting. We're coiling. The volume's terrible. Everyone's prepping for what kind of news we're going to get. But there's moves to be had if you know what you're doing. And if not, sit it out. Watch it out. Don't worry about this big move that's coming. After that big move, things are going to be pretty clear. We're going to have a clear picture no matter what. Whether we go up or we go down, within a couple days of that, the picture is going to be pretty clear. And we'll have plenty of opportunities regardless. So don't feel like you have to make a trade at all, especially if you feel iffy about it, right? And also don't have a bias. Don't say, oh, it's definitely going up or it's definitely going down. That's a bunch of nonsense. Literally, I mean, that is what's called nonsense trading. You're in a situation to where you're going to decide beforehand what's going to happen. I mean, you can guess right a few times, you'll make some money, but in the end, the market's going to get you. So, again, I'm going to go ahead and cut this off. This is True Crypto 28. Glad to be back with you guys. Hopefully all is well. We'll talk very soon.